I am not a financial advisor. These videos are all meant for educational purposes only. All Complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CTA's Daily Review. Today is Monday, November 20, 2023. So we had this big bullish day here. So we weren't bearish. They decided to keep it bullish. What gave it away was the higher highs and higher lows that it created. We opened up the opening week. Now, this might be my last video for the whole year. I don't know, but I wanted to make this video for sure so you can see the logic of why we're bullish still here. Because number one, and I'm not gonna watch previous videos so this makes sense, but there was a video where I said that we did not have a body closed above that gap or on that gap. And this right here, this sell right here, could it have still came down? Sure. But the problem is, and I don't see, I dropped the ball maybe on Friday because I went to go walk my dog. I'm sorry, I had to go pick up my dog from getting a haircut. And I forgot to mention, I knew there was something I was forgetting, but what I forgot to mention was if we're bullish still and we're not coming down, the purpose was to, well, besides it being the fourth quarter, we need to have a body closed above that gap or on that gap. So if you take a look at this gap on the 4 hour, I'm talking about that gap right there. This gap is from August 1st, pretty much. Yeah, August 1st to August 2nd. All right, so that gap right there, that gap has no body. Yeah, we had a wick here on the 4 hour here, but we don't have an actual body. And we want to see a 4 hour to a daily close with a body on that gap. Okay, so that was, and I mentioned that. Go watch. I think it was last week Wednesday. I either mentioned it Wednesday the 15th of November, Thursday. It was one of those days I mentioned it for sure. I know I didn't mention it on Friday. So that was the purpose of us still coming up here, right? Plus taking out that swing high of July 31st on Monday, right? So they were hunting that. So this is the beginning of the week, right? So they've already hunted that, and we have news tomorrow on Tuesday at 2 p.m. FOMC meetings. So because of that is some more reasoning of why they are rushing for the price now. And are we at the top now? Yes, I'm gonna literally say that I think we are. So I mean, does it mean it's gonna have to sell from here? The high of this week, so it's a bullish candle this week. So I'm expecting this to turn into a bearish week. I don't know if they're gonna really take the top out. If they do, fine. But we're slowing down, and we're gonna expect some type of structure like this to start happening, and it being the holiday this coming up week, some structure like this happening here, some structure even like, it could get tricky because they can take their time doing it. But what I do know is that they are reaching their limit. I don't give a fuck if it, what anybody says. That's the case. But the main takeaway is that we have a body closing above this. I mean, we're still in the market for another 58 minutes, but it's going to stay above this level. And this is the purpose. So they can now have on the daily chart, a 4 hour at the minimum, and then on the daily chart, you'll see that the body has now closed above. So that's the whole point of what I'm trying to say here. So let's take a look so I can make this video short. And what was the giveaway of us still coming up? Well, yeah, if you watch Friday's video, I mentioned that this could be a leg to produce down, right? But the problem is that we didn't break this low. And we're waking up, me specifically, already at 9:30. We have a gap here for the first week. This is the darkest purple, and then the lighter purple is the previous week's gap that I highlighted. That's an actual gap. I'm sorry, it's not a weak gap. It's just an actual gap, actual void. of price. So meaning no price has been delivered efficiently at all. Zero. No price action has happened at all in that gap, which is what we're talking about over here, right? This gap, okay? So that being the case, the dark purple, this is the open of the week. We gap up, we come down. Watch this. We come down and we come to here, right? And we never break that low. And I'm ready here at like 8:30, okay? And the price again doesn't come down, and price shoots up here. So I'm gonna drag it out a little bit. So it shoots up here, all right, and then makes a couple drives down right here. Now it's 9:30. Now here's the deal. You don't see it on this time frame, but on this time frame, look at the 15-minute, look at the hour. You'll see I have a gap. I have a gap here. This gray. See this little line in between? See this line right here? See that? Doesn't show it here, but it should, but it doesn't. But I see that on the 15-minute and hour, and I know it's there. And it's incorporated inside our present opening week gap. So look at the body. Look how perfect it is. The bodies are perfect. The wicks aren't coming below it. It's sitting inside that previous week gap. If you're asking me which gap is that, I will tell you it's this little one right here. And it's from Sunday, the 16th of July, 2023. Yes, that fucking gap from then, all right, is present here. Okay, so I have the opening gap. We came below the open. We came above the week open. We retraced back into the present week gap, coupled with that gap that I just mentioned from July or whatever. And look at the bodies. So we have lower high, and lower high right there. Plus, and that's why I got this liquidity line drawn out, we also have that high right there. So in general purposes, this is the higher high, higher low. If we don't break here, then it's bullish. And if it's still bullish, and this is why we use the data, that's why we trade New York, because we have data from Asia and London as well. That's a higher high and that's a higher low. To keep this very fucking simple, higher high, higher low. And what was the purpose? Is that it's still bullish and it's going to continue for a new high. So obviously we have that wick there. We have the gap that we discussed. We have last week's high, which is that high. And we have the high that we just outlined there that I mentioned. So with all that going on, you're bullish and you're looking for buys. Number one. Number two, look at the precision of the bodies at literally 9:15. It closes. And then 9:30, it closes literally on the open of the gap, right? And we have tapped that inside gap from what I mentioned. So with all that and the understanding of these lower highs with liquidity, you're ready to bust through. Now, I used to catch this all the time and show it. But just to show you, I'll go to a 1 minute time frame. Sorry, my dog is barking because my brother-in-law is coming in the house. You'll see here. Now, I caught this on a 15-second, actually. But if you take a look at this candle here, this is 928, 929, and then 930. So 930 is this big bullish candle. I'm already in it. Now, I'm in it because of a 15-second. And I'm going to show it to you just because to show you the value of sub-second time frames. You'll see with detail, and remember, all this is going on while I have this going on. So my understanding is already understanding that we're bullish, that we're going to wipe the liquidity above, and we're going to keep going. And that I forgot to mention to you guys that we want a daily candle or 4-hour candle to close on that gap. So with all that understanding, take a look at this down candle. We pop up right here. Look at this, and we pop right back into it. You see this little 929 and 45 seconds dips in. This is an automatic buy. 930 kicks in right here, and it's opening at the high of the present week gap. As soon as it opens, it's gone. It's shooting. So with that understanding, even if you were to have watched this on a smaller time frame like this, you could have pushed a button at any time. Why? Because the candle itself is going to protect price, meaning it's bullish. They're constantly, each bullish candle here is constantly closing bullish with no retracements. It's just gone. So for me, where am I taking this? Let me go back to a 1 minute because this is, a lot of people don't have sub-second, right? So we're shooting up, we're taking out that liquidity already identified, and you incorporate this liquidity with obviously the high of Friday, right? So that's, you have to have that. If you don't have this context, then how are you going to make good decisions? How are you going to even be involved? Do you have this on your chart? Do you have this opening gap on your chart? Do you have that extra gap inside the opening gap on your chart? Do you have the liquidity identified right here? Do you have this main gap that we've been discussing with no body above it or no body closing of it? So with that understanding, sure, the price shoots up, takes out that liquidity. I decide, takes the liquidity from Friday. Let me zoom out. And then I want to take profit here because the issue with sub-second sometimes is that when I watch these smaller time frames and I see a little bit of bearish candles or slowing down, I'll kind of get spooked and want to take the profit, which is fine. I should take the profit. My goal was to really get to here, but I was okay with that. So take the profit here. This is a 1 minute, right? Yeah. So price then shoots up and gets to, it taps the bottom of that gap by the head. I mean, there's no variation. This is specific. This is not random. This is exact points. So with that, I decided to take a sell here. The sell does come down, gets into here. When the price started to shoot up past this high, I had to get out. I thought it was going to come a little deeper. What I wanted to do is take this sell right here and balance it to the high of the Friday's high. So since we bust through it, this is a basic support resistance. So looking for support or looking to efficiently deliver price back down for a retracement. So I would take another buy. So that was the purpose of this trade right here. But once it is going and getting away from me, then I want to say, hey, I need to get out of this because it's not showing me consistent bearishness. So it busts through. I don't need to lose to find out if I'm right. Let's put it that way, right? So anyway, price shoots up, gets to that gap. Now I'm at 50%. I'm looking for it to retrace because I still know we're coming for a retrace. You do have also identified liquidity here. So with this higher low and this higher low, little too suspect, that's engineered to induce you to buy, obviously, and then so they can come back. So because I know that we have not came back to this Friday's high. Now, I don't need it to come to these highs right here, but when we bust through, I'm gonna go, well, I'll leave it on this time frame. For us to bust through, 9 out of 10 times, we're generally gonna come back to that high that we busted through like that, right? So that's the purpose of this sell for me, which is right here. So in this case, and this is also on a smaller time frame, but in this case, I know that we're at a 50 level on the actual gap. And then the price breaks this low. Once it breaks this low and retraces pretty high, I wait for it to show me something else. It gets into that gap, but it gets into that wick, but it does not take out that high, which is what I want to see for being bearish. Then this bearish candle closes for me, and then the price shoots up inside it. All right, and then that's an automatic entry for me. So price holds, and then it comes down, breaks once, breaks twice. For here, I don't have the level drawn out because I don't want to have too much shit on my chart. But just to show you, that level right there is what I'm talking about, the high. I'm looking to take this sell into here, and it does happen beautifully, actually. Don't forget, with the liquidity identified. It's not a coincidence that low and that low are wiped out. Okay, so with all that being said, you can see, look at the low here, comes right underneath that low. So, and we do tap into that imbalance, and that's all they need. Sure enough, the price shoots off and it's gone. Well, I'm done with the day anyway. I don't want to be involved, and I'm not going to be really trading anymore the rest of this year. Just to be nimble, couple trades here and there, and I'm not interested. I got too much going on. So with all that being said, the price does shoot up, makes another high higher low, high, higher low, retraces back to the gap. Look, this is algorithmic principles. This is not by accident. Look at the way it does come right to the bottom, or I'm sorry, the high of that gap. So the goal is for, and your logic is, if you understand that, price needs to close above this gap, well then, number one, they're going to take their time doing it. Number two, the end of the day, the price is going to be up here at the end of the day. Why is the price going to be up here at the end of the day? Because of the fact that they need a body closure on this gap. So, pretty smooth, pretty beautiful here. So anyways, price does come down, shows support, makes a new high, retraces back. I'm not involved, nor should anybody want to be involved, but price makes a new high, consistently protects its higher lows and right to the target. So as you see, look at the target, look where it went, and then it reacted. Now, I'm not saying it can't go up one more time, but what I'm saying is that, do you see the level? Do you see how it's getting drawn right to that high, and then reaction there? This is all not buyers and sellers pressure. Okay. This is algorithmic, and it's moving on an agenda. Period. There's no debate. There's no conversation. I don't give a fuck who you are and what you think. Literally, I can prove it day by day by it showing its principles moving on key levels. Okay. This is not just random demand zones and supply zones and all that shit. Right. So anyways, that being said, we have the closure. We still have 45 minutes, but pretty sure that that's going to close above this gap. And then now we have also that gap. So the catalyst also for all this to happen, don't forget, is dollar. Because again, I'm not relying on dollar, but if dollar is continuously sinking, I'm going to use that for the analysis of the buying. So as you can see here, we had right here at 9:30, the price shooting down for dollar. We're going up. Okay. So the scenario of us being bearish on Friday, well, we would expect dollar to continue going up. But did you get that? No, you did not. So we opened up and we sank for dollar. So if that's the case, then you're going to see us going up. So period. Very, very simple, right? Very simple logic. And dollar is helping in that provision. So as you see, we're reaching an oversold area on dollar. This is the daily. You can see us reaching an overbought area on all the indices. So as you see, look at the daily right here, overbought. Again, I don't rely on these indicators right here, but this is just added confluence. It's nothing to, be shocked by. It's not rocket science, right? But at the end of the day, we're gonna be reaching the end of the road here. I don't care what anybody says. We're reaching the end of the road here. They've accomplished everything they need to do, honestly. So with that being said, I could show you Dow real quick. Not a coincidence. I mentioned that imbalance right there on the 4 hour. Take a look. Wow, not a coincidence that we almost sealed all of it. Okay, so made a new higher high, and that's it. That's pretty much all that's happened here. So we do have, I did mention these lower highs here with a question mark. Do they wipe that out? I don't know. So obviously I don't know. Tomorrow is FOMC. So tomorrow, what I think they're going to do is they're going to just push it up one more time with some type of wick, and then we're on our way back down for a retracement at the least. So those if you had your stops right here and you had FOMC tomorrow and the price is sitting right here, do you feel safe with those lower highs of your stops? I doubt it, right? But all I can tell you is that it's not a coincidence that they're going to use FOMC to bring the price a direction. In this case, I would say up and down. They're going to shoot it up for a second, if they even do, or they'll use it to shoot it down, period. That's what they use these news events. So they're going to use that to definitely, at the end of the week or tomorrow, we're going to see ourselves sort of being bearish in that sense, right? We still have news the rest of the week too, on Wednesday, Thursday, I believe, but I'm expecting, to keep it again simple. maybe something like this, I'm not even gonna I'm not even gonna go into depth with it. I'm just speaking in general here. And as far as Dow goes, you can see again, look at Dow. Same principles. Open of the week, bounces off of it, goes underneath, takes that liquidity. Here, I'm assuming is 930. Yep, there it is. And what does it do? Retraces back, does wipe out that piece of liquidity there. Doesn't take out that low, but it takes out that low. But the bodies, look at the bodies of the candles are literally laying on the open of the week. Price shoots up, makes a high, and then you're off to the races with them as well to wipe out the previous day high and get into that imbalance that's on the 4 hour. You can't miss that. So you can see higher high, comes right back, retraces back into that imbalance with that down candle. I'm not going to draw any of this. It's unnecessary. But you can see that retraces back with that imbalance and that down candle plus that inversion imbalance. If you drag this candle out, you could see it's very, very obvious. All right. And then you'll see, look at that. Beautiful. So just a basic support turn, higher low. New higher high, retraces back into the same principle here. You have this imbalance, you have a down candle, you have that inversion imbalance right there. If you drag that out, beautiful. So, and then continuously higher lows all the way until we get up into there. So, again, the $1 million question is if we're wiping out those guys right there, right? So, yeah, and I explained dollar and yeah, that's pretty much all you need to know. And it's, markets moving together in harmony. So all higher lows here. You do have a crack in correlation right here. And I didn't even view that. Let me see. Yeah, right here. Pretty much. You had lower lows with NAS and S&P, and you had higher lows here with Dow right here. So you see that? So nothing groundbreaking. That didn't really sway the opinion or the bias. But if you kept it simple, what was your previous price action? You had higher high and you made a higher low. When we woke up, the price was already up here. Right, so we've got look at the 1 hour, for example. 1, 2, 3, 4 bullish candles constantly, right? You see that? So that's a buy program. This is predetermined already before the day even opens, right? All right, so hope this helps you guys. Take care and God bless.